stayed flat. Tim Urbanowicz joins us now. He's the head of research and investment strategy at Innovator ETFs. What was driving the markets today, Tim?
Well, Lily, it looks like we're kind of in this wait and see mode here. Obviously, a very big week for S&P 500 earnings. About 59 names that'll be reporting, so kind of waiting to see what happens there. But really, if you step back, we've been in the mindset really all year. We've had the equity markets that have been far too complacent for some of the headwinds that are lingering out there. Not only do we still have inflation that is a serious issue and coming down very, very slowly, but we're also entering a very crucial point of the Fed hike cycle where we start to see what type of damage has already been dealt. And if you look, we have some of our research that we've seen is that really when the Fed pauses rates, on average, we see a recession kick in 6 to 7 months after that last hike. So right now you see a lot of exuberance over when are they going to pause, when are they going to pivot. The reality of it is when that happens, that's when we'll see what type of damage has already been dealt.
I see. Well, Charles Schwab and State Street both initially fell after sharing their latest earnings results. Would you say the banking industry is still recovering?
Well, it looks like we found some stability after the Silicon Valley banking collapse. Yeah. It looks like depositors are getting more and more confident. And if you look at earnings as a whole, the last 40 quarters, what we have seen is that in 37 of those 40, actual earnings have surpassed estimates. And for this quarter, we really wouldn't anticipate that you would see much of a deviation from that trend. And that really comes down to what we've seen from the consumer. Up to this point, we've had the consumer that has been really on firm footing. Retail sales has been very strong. Consumer spending has been very robust. Yeah. So you look at consensus earnings for this quarter, they may be a little bit too pessimistic, where the damage could be felt more in Q3, Q4 of this year.
And, something else that's been in the news, just to change topics a little bit, has been the new Apple Card Savings account. That launched today with, given the interest rates, a fairly high interest rate. How were investors reacting to that today?
Well, I think it shows not only just the power and the stickiness of some of the Apple products, different business units that they can go into, but also just the search for yield that is out there in the marketplace today. In the ETF industry, what we do, one of the products that we have out there are the new premium income barrier ETFs. If you look at trading in the first 2 weeks here, been very, very strong, $30–40 million of inflows there, just showing that investors are gravitating toward yield. The Apple situation being similar, where investors are going for higher yield. What we're seeing in the ETF marketplace is really no different.
Yeah. Well, Tim Urbanowicz, thank you so